Welcome to my channel. In this video, I'll be discussing 10 common mistakes new crypto investors make. By knowing them, hopefully you as investors should be able to avoid them and be more successful financially in year 2023. Okay, without further ado, let's get started. Cryptocurrency is a digital money that does not exist in physical form. Data mining is the procedure that takes this information and processes it and verifies it. Because to its rising demand in recent years, its price has increased 400 times comparing to its previous level. Money printed on paper depreciates with time. You should invest your money somewhere it can grow. Putting money into digital currency is probably the most efficient way to accomplish this. Many people, however, construct enormous structures at this time, and new digital money financial supporters frequently make mistakes. Investors that put their money into cryptocurrency and got things done early on stood to gain a lot. At the rate at which new investors are coming on board, such rapid success is unthinkable. On the other hand, there is still a lot of money to be earned. There are a few common mistakes that new digital currency investors make that might have a negative impact on their projects. Most first-time investors don't know what they're doing and end up making some blunders. Most of the common mistakes made by early investors in digital currencies are, fortunately, easy to avoid. Investing in the best digital currency takes into account more than simply karma, including experiences and precision. You may profit from the blunders made by novice digital currency investors if you place your money into the greatest cryptographic forms of money now available. Certain digital currencies may be extremely detrimental to your portfolio's management, so be careful if you decide to invest. Here are the top 10 mistakes that first-time investors in digital currencies tend to make as a result. You're going to learn the market you're trading in, start where you are and go from there. The adage, knowledge is influence, has never been truer than it is in the realm of cryptographic money. Learn to read the cost curves, identify your investment window, and integrate key information with your well-researched estimates. If you follow these guidelines, your ventures using digital currency will be completely fruitful. This is mostly due to the blunder made by novice investors in digital currency. Some investors need making as much as 15 or more transactions every day, which is dishonest. Many of them wind up losing because of fees or because they made some bad trades and then try to make up for them by trading some more. High volume of requests for action, unfavorable autonomy of guidance, and increased trading costs. This is a common blunder made by early investors in digital currencies. Many investors make a deal without investigating the costs or potential benefits. The largest and most well-known cryptocurrency exchanges are also the ones with the highest fees. You, as a financial backer, need to look for low-cost, safe transactions to make your portfolio more productive, as high charges indicate fewer net income. If you have to pay a lot in fees, your profit margin on the business will shrink. That's why it's crucial that you choose a reliable trading platform. The use of virtual currency and the planning of budgets are profoundly impacted by the entertainment industry. It should come as no great surprise, therefore, that token creators and financial supporters put strict limits on their tokens' marketing. Investors are still feeling the effects of this widespread phenomenon from the crypto market meltdown of 2018 today. Be wary of information that seems too good to be true while enjoying online amusement. Articles with misleading or even damaging titles like "Bitcoin made me a tycoon" or "Ethereum will rocket in value" are common. I'm not denying the possibility that cryptocurrency may make you rich, or that Ethereum's value could rise. Yet, as a general rule, media attention stimulates a surge in speculation, which in turn causes a digital currency to surge in value. Thereafter, the long-term investors propose to make a significant profit, leaving the other investors holding the stock that is unlikely to be profitable. Once the Bitcoin bubble crashed in 2017, several people benefited financially from this advertising. Yet, individuals who hadn't sold before the air bubble burst were left in a dire financial strait. There are a lot of scammers that take advantage of inexperienced Bitcoin investors. You'll need to take preventative measures. Don't just blindly invest in unproven websites, do your homework beforehand. Pyramid schemes have an impact on the Bitcoin industry as well. Find out if any website is offering investment in exchange for cryptocurrencies by signing up for an alert. Be wary of any links and suspicious emails that seem to come from your wallet service. Never lose sight of the fact that a coin's current market price has no bearing on its long-term value. Don't waste your time or energy chasing for worthless pennies. Sadly, many inexperienced crypto investors acquire cheap cryptocurrencies because they mistakenly believe that they have a greater possibility of making significant profits. As the value of a cryptocurrency rises, many potential investors bet that its value will continue to rise. So they save a ton of money, which usually ends in disaster. They generate massive losses because they tend to buy at market peaks just before prices start to fall. For the effective use of digital currency speculation, security is a must. Another financial supporter should think about investing in equipment wallets to safeguard your speculations from criminals and hackers. Trust among investors is an ongoing problem. Trade wallets, where all their money stays within the various exchanges. Poor financial planning is a common mistake made by early supporters of digital currencies. This is acting hastily and making decisions without taking into account the current situation. For instance, Bitcoin is incredibly problematic, and its value fluctuates by large amounts quite regularly. Most Bitcoin millionaires were early investors who held on to their coins for long before selling at a profit. The value and use of digital currency are susceptible to rapid and dramatic price fluctuations. This is due to the fact that many investors engage in short siphon trading before moving on to another currency. So, these are some of the most typical faults of amateur cryptocurrency investors. If you want to prevent financial loss and other potential pitfalls, you need exercise caution and actively seek them out beforehand. Okay, that was for today. Thank you so much for watching the video. Please don't forget to like and subscribe to not miss my future videos.